We're seeing some much needed relief in the crypto market today after the major drop that happened over the last couple of days, and this comes because of the CPI report that was released today. Watch to the end of the video and I'll explain exactly what's going on and where I think the market's going next. How's it going, everyone? My name is Jake with Trade Confident. Today, I'm going to be talking to you about the CPI report that was released this morning. This is crazy good news. The report showed inflation much lower than we had been expecting for October, which shows that the federal interest rate hikes are actually working. In this video, I'm going to show you the exact inflation numbers, and I'm going to show you how the stock and crypto markets are reacting to it. Let's get started. This report comes from the U.S. Bureau of Labor Statistics here. The CPI for all items raised 0.4% in October as shelter, gasoline, and food increase. In October, the consumer price index for all urban consumers increased by 0.4% seasonally adjusted and rose 7.7% over the last 12 months not seasonally adjusted. The index for all items less food and energy increased 0.3% in October, up 6.3% over the year. Now, most economists were expecting an 8% increase in inflation over the last 12 months for October, with a 0.5% increase in core inflation. Instead, we got 7.7% for the last 12 months and 0.3% for core inflation over the last month. This is staggeringly lower than we expected, and this is great news. This means that the federal interest rate hikes are actually doing their jobs. The significantly lower inflation rate that was reported for October just shows that the federal interest rate hikes are actually working. The economy tends to move really slowly, and it's been a really painful year for a lot of people. But it's finally slowing down, and we could see the feds finally ease up on the federal interest rate hikes. At this point, economists are expecting about an 80% chance of a 50 basis point interest rate hike for the month of December, and about a 54% chance for a 25 basis point hike in the following FOMC meeting. This is really good. This is great news for the economy, and it means that the Fed pivot could be coming much sooner than we expected, and with that, that means the bear market could be ending soon too. Let me show you how the market's reacted overall. From where it was yesterday, the S&P 500 rose 4.28%. The Dow Jones rose about 2.69%. The Nasdaq saw a 3.44% increase. And interesting, the dollar index saw a huge drop here. Check it out, guys. We dropped about 2.14%. This is crazy for the US dollar. Now, all of this accumulates into a huge move up in the general crypto market. As you can see here, we got a rise up. And for those that don't know here, the dollar index tends to negatively correlate to Bitcoin. This means when the dollar drops, Bitcoin moves up. When it moves up, Bitcoin drops. So to see the dollar index drop and see Bitcoin move up so sharply is really good news. Now, I will get deeper into this analysis on the 4-hour time frame, but first I wanted to talk about crypto macro metrics on the Trade Confident website here. These metrics are really important for getting a good overview of the market, and if you want access to these, be sure to join the membership at the link in the description. With this membership, you'll get access to these macro metrics along with 40 trading charts and many more benefits that come along with the membership, so be sure to join soon. Bitcoin and Ethereum have both fallen into anxious territory. Now, the saying goes, be fearful when others are greedy and greedy when others are fearful. And right now we are in anxious territory. This is a time that many investors are going to start feeling greedy again. People are going to be buying into the market, and that's exactly what we saw with these price jumps here. Now, again, these were independent of anything that crypto was doing, especially over the last couple of days. This more comes in response to the CPI report coming in overwhelmingly positive. Bitcoin saw a huge jump in short trades along with Ethereum. Ethereum did see a jump in long trades though, where Bitcoin did not. At this point, whales are generally looking to enter long trades into the market. The long trade sentiment has slowed down significantly though, and I think it's reasonable to expect to see short trade sentiment entering back soon. Now I'm going to show you just 2 of the 40 trading charts you can get access to with the Trade Confident membership here. I'm going to be looking at Bitcoin and Ethereum right here. Both of these charts were updated this morning, November 10th. And as you can see here, the TC market reversal chart is expecting a move up with the green bars on the TC market reversal chart here. This comes after Bitcoin pushes through into the green section of the chart, staying well below the blue midline, indicating a general downtrend. We're seeing a similar situation for Ethereum here. The bullish sentiment is not quite as high here, and I think this is the more reasonable expectation. Of course, the move up again did happen because of the CPI report, nothing that crypto did, but Ethereum did push into the green area on the TC top and bottom finder here. Taking a closer look at Bitcoin on the 4-hour time frame here, we just barely tested the $1,800 resistance level. This is a really strong point of resistance, and we are since moving back down. Now, as I said, I don't expect this pump to last very long. I think the stock market is going to continue doing well for a little bit, but crypto is in the middle of a crisis with the FTX collapse. This is a brand new situation that's going to continue evolving, and it's just been announced that FTX has filed for bankruptcy. So at this point, I think we do still have room to move down. The next structure support at this point was formed over the past few hours and sits at about $16,700 right here. Overall, though, I wouldn't be shocked if we move down to test the $15,500 level. Now, we may need a catalyst before we fall to the $14,000 or even $12,000 level, but I wouldn't be shocked to expect this, although the CPI report showing that inflation has heavily slowed down could kind of throw a wrench in that. We may not see a market bottom as far down as $12,000. But I think between $15,500 and $14,000 is reasonable to expect coming soon. But again, the first area that we need to test, the first support that we need to test is the new one that formed over the past few hours at $16,700. On the 4-hour time frame here, the trend exhaustion and price versus money flow are on their way back up. They do have room to move up, but again, the CPI report was actually what caused the move up, not anything to do with technical analysis, so I wouldn't be shocked to see a move down. On the 1-day time frame here, we do still have that solid green candle with trend exhaustion and price versus money flow moving up, but again, on the 1-week time frame, we have plenty of room to move down. And at this point, we're trying to look kind of on the monthly basis. We're trying to look a lot longer term because we have a major crisis in crypto. So more often, it's better to look on longer time frames because the economy is a slow moving thing. Crypto is pretty fast, but the economy takes time. So staying on the 1-week time frame here to look for much bigger trends in the market is a good idea. But what does all this mean for Ethereum? On the 4-hour time frame here, we can see that we very nearly tested the $1,000 level. We got to about $1,100 here to find strong structure support. And we got a strong buy signal as Ethereum fell into and bottomed out on the green liquidity pool. We've since moved up to test structure resistance at about 1,345 here and are on our back and are on our way back down as we are with Bitcoin. Similar to Bitcoin, we have created new structure support over the last few hours. This lies at about $1,200. So we will need to test that before we move back down to 1,100. And if that breaks down, I think 1,000 is the next structure support to look at. On Ethereum, the trend exhaustion and price versus money flow are a little bit higher than they were for Bitcoin on the 4-hour time frame here, although it is a little bit lower on the 1-day. Price versus money flow might be a little bit higher here than Bitcoin, but in general, they're just about even. And the 1-week time frame shows a similar story yet again to Bitcoin with a huge drop here. Trend exhaustion and price versus money flow still have a ton of room to move down, and I think that's exactly what we're going to get. Now, for the trend exhaustion and price versus money flow, it typically takes about 1 to 6 candles for indicated moves to happen. So we have about 1 to 6 weeks here to see how this is going to play out. Now, before I conclude all this, before we wrap up the video, I do just want to show you how to get access to the indicators you saw me use in this video. These indicators have been crucial for helping us navigate this crazy market that's been happening. And if you want to get access, all you have to do is click the link in the description. When you do, it'll bring us to this page here. And before I even get into it, just to prove to you that these indicators work, this person made $950 in 1 day, $4,300 in just a week, $500, $5,200, $4,300 in their first 3 trades with the TC top and bottom finder, $3,200 in 3 days. These people are doing absolutely incredible with these indicators. So if you want to get access, the best possible deal is going to be purchasing the bundle pack first, and let me tell you why. The bundle pack comes with 9 indicators, including the price versus money flow and trend exhaustion you saw me use in this video. In addition, though, it comes with a $400 off coupon for the TC top and bottom finder here. This gives you all 11 of trade confidence indicators for just the price of these 2 alone. So this is going to be the best possible deal, snagging the bundle pack first, using that code, and then buying the TC top and bottom finder here. No matter what you purchase, though, you get lifetime access for a one-time payment, and you get full dedicated email support. So be sure to send us an email at btradeconfident@gmail.com if you have any questions. To wrap up the video, everyone, the CPI report came in way better than we expected, at 7.7% for the 12 months in October and 0.3% core inflation. This is wildly better than we expected and almost all but confirms a 50 basis point interest rate hike in December. If we do get that basis point hike, that will indicate a Fed pivot. And after that, we have a 54% chance of a 25 basis point interest rate hike in the next FOMC meeting. This would be hugely crucial to the market, and it could cause big moves up as they happen. So if you want to stay updated, be sure to like this video and subscribe for more crypto content, education, and analysis. We're going to keep everyone updated through these crazy markets. So again, please subscribe. With that, trade safe, trade confident, and I'll see you in the next video.